And as always, we're going to be looking for accurate context, good risk management, and always exercising good patience.
Anytime you're talking about fundamentals in a market and direction, fundamentals take a little bit of time to play out.
We got crude oil today, kind of trading yesterday's value area really nicely, low to high.
That's what we're here for, is to put ourselves in the best success. A trade routine does that, builds that habit, lets you know what to work on, what to reflect on, and what to improve on the next day.
Good morning and welcome to the market forecast. Today is Tuesday, December the 7th. I'm John. Thanks for trusting me with your time. December 7th, Pearl Harbor Remembrance Day. Today we honor the 2,403 service members and civilians who died that day, as well as the 1,178 who were injured during the attack. Make sure you say a prayer for them and for all of us. Today, as always, we're seeking context, good risk management, and patience in these markets. Economic numbers this morning. We had the trade balance come out. 67.1 billion, considerably higher than I think that they were expecting. Productivity and costs also out this morning. Echo. My bad. Sorry about that. Yeah, the gremlins are back. Well, hopefully you were able to hear what I was talking about as far as Pearl Harbor is concerned. Always December 7th, we remember those who lost their lives and were injured on that fateful day. Pray for them and for all of us. Trade balance came out this morning, 7:30. A little bit higher than they were expecting. Our equities look like they're going to be opening very strong this morning, and they held those levels after the we still echoing? Okay, now, okay. All right, good. Like a Dodger game. So, yeah, the equities looking like they are set to open sharply higher in very patriotic fashion this morning as the Omicron fears begin to ease. The equities held those highs after the trade balance numbers came out. Crude prices find a bid again as demand potential increases with the lack of the fear of the Omicron variant. The president and Vladimir Putin are going to be speaking today regarding tensions in Ukraine, at the border of Russia and Ukraine. I'm sure we're all well aware of that. China has eased monetary policy. May also reverse some curbs on steel production, which may help the ailing real estate industry in China. And, as always, looking at the VIX with the equities as strong as they are this morning, down 12% actually at 23.93. Dollar index up slightly, 96.44. And the 10-year yield up slightly at 1.45. So, as always, make sure you hit that lucky like button. Comment, question, feedback, sharing, and heckling are always welcome. Subscribe to our YouTube channel so you can get notifications when we do go live. Had a good session of group coaching yesterday. I'm going to put the link in so you can join us for tomorrow's group session. Unfortunately, we will not be having the live market therapy on Wednesday. However, the doctor is going to meet with me, and we're going to record a session of how to kind of give yourself a mental review and a psychological review of how you did in that regard this year, and how to prepare yourself for next year. It'll be up on YouTube as soon as we're done with it. And we will see, how that goes. He's a very busy guy. We're lucky to have him with us when we have him with us, and he's we're going to do this a little bit more podcast style this time. Unfortunately, we won't be able to ask questions, but it should be a really good session. Always love to hear the doctor, and I'm sure he's got some great ideas and thoughts for us on, again, reviewing our psychology from last year and preparing ourselves for the coming trading year. As always, I got to say good morning to everybody, and I apologize for the double mic. I've been working on some technology to take care of that for once and for all. Good morning, Brian, Andre, Jim, Janus, Frederico. The infamous Felix Escobar is here. Good morning, Felix Charles. My brother Rick, again, channeling his inner Matthew McConaughey. All right. George, good morning. Zerain, dead letter opener. Sorry about the shorts you got yesterday in crude. We've got a late spike yesterday in crude, so we've got some interesting opportunities and some, at least some really good context or texture to crude oil this morning. We're going to see that in the charts. Maybe you can get that dough back today. Deanna, good morning. Three Lions, good morning. Good morning, Vince, Mirik, Chris, George, Echo. Everybody's saying Echo. James, both mics are on. Like a triple echo. I'm so sorry about that. Frederico, I'm just a goof. Isaac, Sarah, good morning. Three Lions, better. All right, good. Like a Dodger game. Yes. And now up to bat. The SSSSS and then PPPPs. Rob, good morning. Frederico. Good morning, Laura. Rob, always thinking of Pearl Harbor and from the UK. James, good to see you. Good morning. Nemo, Santa Claus Rally, right? How about it? Daryl, James, good morning. Daryl, possible big drop after 10 p.m. We'll keep an eye out for that, of course. And Isaac, David Keene, good morning, everyone. All right, so we are set, I think, to take a look at these charts. Let me get things set up correctly here and get the mic on, and let's see what we've got going on. Moving over to the charts. All right. We should only have one mic on now. So volume has slowed near the lows here and then coming off the lows again. We see volume just kind of feebly moving along. We did add 1,900 in open interest on this push to the upside yesterday, and we are facing a market state change here with the price holding above the weekly kickoff high, which is $71. If we can hold this, we're going to be opening with a gap. We'll see that on the 30-minute chart here. This test of the weekly kickoff high. And remember, these weekly kickoff levels are meant to be levels that I'm viewing as important in longer time frame. I'm expecting longer time frame traders to need to or want to adjust inventories at or around these levels. Quite often, they become really good levels for execution. From time to time, they become a little bit magnetic, so we have to be careful about that. But again, they're not meant to kind of envelop the daily or the weekly range. They're a longer time frame look at potential for longer term traders to get into the market. We do have plenty of space above this market, and we do have a late spike yesterday. Let's take a look. So the late spike occurs at the end of the session when there's range extension and it closes in or above that range extension. We can see yesterday at the end of the day, we continued this move to the upside, and in regular trading hours, we did not have time to accept that higher pricing. So that leaves this late spike When we open in or above the late spike, it's indicative of acceptance of higher pricing. So we go ahead and we start looking for opportunities to buy when the market offers weaknesses for us. Now, we've got another situation here where settlement is 69.49. All of our overnight activity continued to build longs in short time frame. So there's a couple of opportunities for us. If we are to leave the opening range at the low of the session, buyers may continue to be in control and may be in control for the better part of the session or the entire session or any part of the session. There's no guarantees for anything, and we're going to see if we can't catch the opening range here shortly. So we are opening with a gap. Gap rules apply with this as well. If we can't close the gap relatively early, we need to be looking for opportunities to buy weakness. So the overnight inventory offers an opportunity for the market to pull back to a deeper level for us to look for the opportunity to get longs. But again, if the opening range remains the low of the session, it may leave us behind. So again, we're going to watch that opening range again this morning, and we're going to see if we have an opportunity using the opening range to enter in to an opportunity for a continuation, or how about even an inventory adjustment where a lot of these longs might get nervous, take price to a lower level for us to look for an opportunity for a long. The late spike doesn't necessarily break until basically we get back through this previous gap. The late spike, the bottom of it is the high of this bar, which is 69.29. So we've got $2 really before we start to believe that the pricing at this level is being rejected. It might be rejected if we were to get back into yesterday's area of value, which would bring forth another special situation. Not necessarily expecting that to happen, but nobody knows for sure either way. So just kind of reviewing here before we get to that 1 minute chart, we've got a gap, we have a late spike, and those are nuances that say that the market is accepting higher pricing. We also have long overnight inventory. I would say this is very long overnight inventory, which is a potential pullback, a potential for longs to liquidate to bring price to lower levels for us to look for opportunities. So the market is opening out of range, out of balance. I'm going to put a little bit more emphasis on the importance of the opening range. The opening range could be, might it be? It could be something important for us to look at. Now, we've got about a minute before the opening range starts. I want to move on to the S&Ps. We'll take a look at what's going on the daily chart there, and we'll go back and watch that opening range in crude oil to see if there's a decent opportunity. Open interest indicates new longs yesterday. We added 5,300 in open interest. Volume fell off, but volume tends not to be all that tremendous on up days in the equities. Weekly kickoff in play. Remember, these weekly kickoff levels are more important inflection levels than just a daytime frame opportunity. When the market approaches them, it offers daytime opportunities. But again, it's an expectation or a hypothesis that longer time frame traders are going to need to adjust inventory. And we always want to know when the longer time frame is in the market in bigger ways. They're adjusting inventories all the time. When the bigger levels come for them to change or adjust inventories is where I'm really interested in. So we've got the weekly kickoff level in play where we've got obviously a gap to the upside. Medium time frame downside structure is now broken. Okay, if we were to take a trend line and go across here, we've got price on the other side of that trend line and above the weekly kickoff level. This medium time frame level, this medium time frame structure is broken to the upside. Okay, let's go back to crude oil. Let's see if our opening range offers an opportunity. It's not populating it here just yet. Okay, there it is. All right, we've broken out down below it. So what I'm thinking is we may have an opportunity for us to see a better trade location for longs near the base of that late spike or anywhere near that late spike. So the opening range has been left at the high. Our overnight inventory traders getting a little bit nervous. As long as that remains the high of the session, weekly kickoff could be an important inflection level to look for an opportunity. We've got a naked point of control here that also offers that opportunity. The top of the late spike and the gap close also offers that opportunity to look for longs. And then the base of the late spike, which again is relatively close to the bottom of this previous gap here. The base of the late spike is 69.29. So we're starting off with a little bit of an inventory adjustment. I'm not going to fall in love with that because we've opened above the late spike. All right. So let's go back to the S&Ps here and finish up what we are looking at. So again, medium time frame downside at risk of breaking. Okay. Right now it's broken. Take a look at the 30-minute chart. These moving averages, dead letter opener. I'm assuming we were looking at the daily chart. This is a 20-session exponential moving average. This is a 50-session exponential moving average. The other moving averages that I have on here is a 9-session whole moving average and a 13-session whole moving average. I use those to help me kind of distinguish when momentum may be starting to drop. Here's the 30-minute chart. Let's see if there's an opportunity for us there. So again, settlement here, 45.90. We've got all overnight inventory to the upside, and we've broken out above a weekly kickoff level. So this weekly kickoff level may be supportive, especially if we have an inventory adjustment after the open back down to that level. Again, 20-session, 50-session exponentials. The whole moving averages you're seeing are telling us that the momentum that we saw on the way up here is falling off. The 9-session is now below the 13-session. Now price is largely holding below them. Now, this can certainly change on the open when the regular trading hour traders come into the marketplace. We are going to be watching that opening range trade to see if that offers an early opportunity. So we have gap rolls, we have overnight inventory to the long side, and a weekly kickoff level right in the middle to offer some degree of risk management if the market does bring us back to that level. Take a quick look back to the crude. Still, our opening range remains the high of the session. We're approaching a 1-to-1 reward over risk on that trade right now. NASDAQ. All right. The NASDAQ has been presenting as weaker and is still presenting as weaker. I don't feel as though this move to the upside has necessarily broken downside structure yet, and we're still pretty far from weekly kickoff high. We had a drop in open interest yesterday on an upside move. We still have a lot of doubters here in the NASDAQ. That medium time frame downside structure is still intact. At risk of potentially breaking, there is some pretty good space to run to the upside. Take a look at the 30-minute chart. Okay, so we have settlement 15,842.75. We've got overnight inventory to the long sides. We're not quite to weekly kickoff high here. We're opening with a gap. That's good information. If we can't close the gap relatively early, we continue to look for opportunities to trade to the long side. We've got plenty of upside visual targets. We have a naked point of control here. This is goofy. We have last week's high here. There's also visuals down below. But with the gap here, if we can't close that gap relatively early, I understand relatively early is a subjective term, but it would indicate the longer price spends up here above yesterday's range, the more likely it is to accept higher pricing, and we can look to buy weaknesses. As far as high volume nodes here, we're pretty far from yesterday's range, but the point of control here is at 15,839. We've got another high volume node down here, pretty close to value low at 15,690. So it's going to be a while before those come into play for us, but it's always good to be prepared if the market does offer those opportunities for us. Charles, it's always my pleasure. So here's gold. Gold continues to be somewhat range bound, obviously. So here's 1, 2, 3, 4, 5, 6 days in range. For the last two sessions, here and here, open interest hasn't moved more than a couple of hundred contracts. So we're not really bringing in any interest here. And until we break out of this area of balance, I don't think we are going to be bringing in any new interest. If we take a look at the extremes of this area of balance here, extreme of this balance here, we're in the middle. We're in short time frame control. Short time frame levels are going to be more likely to be respected. We've got, our risk on mood in the equities has returned. 6 days in balance. Open interest moot. 30-minute chart. So we have a little bit of coiling activity here. We've taken a look down below that. We've actually, I think, almost traded to this naked point of control, just almost. But really, if this is, kind of one auction here, okay, if we were to spread this out all the way across, the point of control is right here. Value low for the area of balance we've been in is here. It's just below weekly kickoff low, 1768. Value high for the area of balance we've been in about here, 1785. Just some random walks. It makes sense to me that the market has offered an opportunity down at this previous naked point of control here, because it's going to be adhering to short time frame levels. We are getting pretty close to a chance to see if the weekly kickoff low offers opportunity. But again, this is range bound activity, and I'm going to really try and stay patient. I mean, we haven't really left this area for 4 or 5 sessions, and I'm going to suggest trying to stay very patient in this. Take a look at the euro. Here's the daily. We saw yesterday that we have what appears to be a downside channel here that, the market did come up to it. I'm not really that confident that this is a bull flag, although if it does take out above it, we can always call it a bull flag. Low volume inside this channel. Look at how low the volume's been. We did add 5,200 in open interest yesterday, which I do find interesting, as we were, kind of largely range bound. If it were going to be assigning a side to that increased open interest, I'm going with new shorts in this market, and they seem to be getting paid today. Are we getting too short? Is this going to end up to be somewhat of a bull flag? Let's take a look at the 30-minute chart and see what it looks like for us now. So here's that channel. We're right at the low end of that channel. We've got some visuals down below with which to continue to check to, but so far we've rejected outside of this channel. So, we've got a gap. We've got overnight inventory to the short side. Settlement is up here at 112.80 and a half ticks. If we can't continue this move to the downside, there may be enough shorts in short time frame to bring this market back to a close to a gap close, or even more so towards settlement. If we are going to continue our volley through this channel, the ultimate move would be to come back and retest the high end of the channel. What's going on with the 10-year and the nat gas? Nat gas is a fascinating market. Here's the daily for the 10-year. Very slow volume. Okay, we just rolled over last week. Very slow volume here. Range bound activity. We're right at the bottom end of what I would call the range here, and we've got a 1, 2, 3 contact trend line that we're holding below. So I'm starting to think we need to start to sell strength in this market. We did have a little bit of an uptick in rates this morning, so that makes sense that the market is heading to the downside. Risk of a breakout to the downside below this trend line, a short time frame trend line, but a trend line nonetheless. Take a look at the 30-minute chart. So here's that trend line that we were kind of watching as potential support. We are below it now. I think there's a little bit of a change to this. Hang on a second. No, that's not what I want. All right, I'm not going to worry about that right now. We are, breaking out below this trend line here, and we've got plenty of visuals. Last week's low, we've got weekly kickoff low, we've got another naked point of control that remains unchecked down here. This is from Thanksgiving. So it's looking more like this is a sell strength market than a buy weakness. No, anytime we talk about these things, anything can change. Let's take a look at the natural gas. Here's the daily. Okay, we had a weekend gap. We don't see this that often, but it is a weekend gap. We had higher volume yesterday, losing 18,000 in open interest. Do you think there were still some trapped longs here that got out on the weekend gap down here? That may be enough to remove selling power and for our momentum to the downside to begin to fall off a little bit. Great volume, but open interest indicative of liquidation on a down day is long liquidation, not new sellers. Now we've got our whole moving averages still pointing lower. This would be very preemptive to start looking for longs, but we do have price above the whole moving averages, which is one of the things that I look for to see if momentum may be starting to fall off in one direction or another. So we're starting to see hints of that. And the fact that instead of adding open interest on this down move yesterday, we lost open interest. Long liquidation takes selling power out of the marketplace. We still have downside structure remaining intact, one time frame lower all the way to this point. Now we've got an inside extended trading hour range. Let's look at this on the 30-minute chart. There it is. So settlement. Our overnight low, overnight inventory is now liquidated. They've reconciled. 7 o'clock this morning, starting to maybe get a little bit long. No gap. Attempting to try and take out the high of the range from yesterday. We got our overnight high just above, the weekly high just above here, and then we've got our gap. So the market got a little bit too long. Back to settlement before the open. Buyers have now come in and are kind of pushing or attempting to push price higher. We've got our momentum on the daily chart saying things may be slowing a little bit to the downside. I don't want to give up trade location for momentum. That makes sense. If this move to the upside breaks out above the overnight high, that might be an opportunity for us to go with it. But I'd much prefer the opportunity in the daytime frame to buy down near the low of value from today's session, which we'll pop this on here real quick. So here's value low. Still a lot of range down below that in the daytime frame. It's going to be another interesting day in the markets. What's our crude trade doing? So we got to about 2-to-1 reward over risk on this. And that may be about enough for our overnight inventory adjustment. Watch and see what happens if we take out the high of the opening range. To just go back into context here, we had a late spike. Here's the 30. Market took us back to recheck. Weekly kickoff, perhaps a check of this revisited in regular trading hours point of control. We have to see how this plays out. So far, the opening range still remains the high of the session, so I'm tending to look more for shorts. But if I caught this 2-to-1 trade and got out at a visual level, now we've got another opportunity to see what happens if we get back into the opening range, which again remains the high of the session so far. Will crude roll over? Will crude go to the moon? Will the S&Ps put up new highs? This and many other questions answered as we watch as the market turns. All right. Okay. Tuesday. What else we got here? See if there's any other questions. Got your moving averages. Dead letter. Can you mention you got your nodes? Anything about GC? Felix, man, it's really in a kind of a range-bound activity. It seems as though the gold is looking for new information. It took a look below that trend line we saw. It's back in range, back in value from yesterday. Try and stay patient. It seems to be waiting for new information. There's been very little open interest change in the last two sessions. The market is looking for something new to kind of fixate on. With risk on in the equities, I'm going to suggest really trying to stay patient in gold. Mert, nice to see you. Charles Ednelson, good morning. The name of the 9 and 30, Hull, Hull, Hull moving averages. Thank you, David. Your letter opener, thank you. Thank you. I would love to have the best trading day ever. And I hope the best for all of you. Really looking forward to seeing your success. We've got Coach's Playbook today. We're going to be talking about knee-jerk reactions. That's at 11:30 today, and then we'll see Dan for the market recap at 3 o'clock. Tomorrow, market forecast. We've got the group coaching. No session with Dr. Menaker. I do apologize about that, but we are going to be meeting one-on-one to discuss, again, taking stock of your psychology from last year and preparing for your psychology for next year. Have a great trading day. Trade well. Get out there and profit. I'm going to head down to the proverbial trading pit now. I'll see you there. Have a great day.